Just when there was talk of the US dollar possibly losing its status as reserve currency of the world, well, it roared back this week. Joining me today to talk about it is Ross Norman. He is the Chief Executive Officer over at Metals Daily. They are an aggregator of precious metals news and news worldwide. Ross, it's been a long time and nice to see you.
Good to see you again, Daniela.
You know, I think I've been in precious metals a long time, but you beat me 35 years. 35 years. And we're going to talk about your career a little later because you've worked in all facets of the industry. So I want to get in here for a second inside your mind and brain on gold. But US dollar, we had discounted it a few months ago, and now look.
Absolutely. Everyone was saying that, look, the dollar's going to collapse, particularly post the election. Furthermore, ask people what's driving gold, and they'd normally point to negative real yields. And of course, they are rising. Today, gold is off 0.6%. The dollar is up 0.6%. The dollar is reasserting it. Not only is it strong, but it's also reasserting its control over the gold market. And it's the key driver. So gold's on the uppers, if you like, under some pressure today. And I think US dollar strength is certainly bringing that pressure to bear.
And speaking about people who have discounted the US dollar, Stanley Druckenmiller, just this week, the billionaire saying he's shorting the US dollar, very bullish gold. How do you see it playing out, Ross? Because, you've been in this sector a very long time. What's your take?
Well, the US dollar still is the world's global reserve currency. The yuan represents, 2% of global trade settlements. I mean, the end of the hegemony of the US dollar is much talked about, but there's little evidence of it. Still, central banks hold their reserves in US dollars as well as in gold, of course. There's probably some talking down of the US dollar. It might be a reflection of dissatisfaction, if you like, with US politics and the position. We all watched the early debates. It wasn't a very illuminating event, was it? But the reality is the US dollar still maintains its powerful position in the world global currency. So I think it's overstated.
And speaking about elections, there's a lot of talk of how if there is a Joe Biden Democratic sweep, how that would be better for gold. I haven't spoken to many people who have said, should Trump remain in the presidency, that would be bullish gold. What's your take on that?
Yeah, the blue wave. I mean, if you look since 1971 and you added up all of the gold gains under Democrats and Republicans, it's significantly bigger under Democrats. But the reality is it's a false hypothesis because there's some anomalies in there which account for those differences. Some presidents saw some big gains. The reality is there isn't much correlation between one administration and the other in the main. I think the main thinking about the blue wave, as it's referred to, is the likelihood that Biden's going to bring about a significant print and spend. We're already talking about a $2.2 trillion stimulus spend. And it said there's a further $2 trillion upfront infrastructure spend. We're throwing around $1 trillion here and $1 trillion there, in the way we used to throw around billions. In short, the blue wave, I think, would probably be the most gold positive story that we could foresee, simply for the gold investor, because they would foresee down the line that the only way out of this mess will be massive QE, significant inflation down the line. And I believe it will be the case. So for the investor, it would be rather good.
But my counter argument to that, Ross, is, but even if let's play out the Republicans stay in power, we would still have QE. We would still have the trillions of dollars of debt. That landscape doesn't go away.
No, it doesn't. And what have we seen over the Trump administration? When
gold he joined, right.
When he joined, where was the gold price? It was $1,200. It's seen a 60% increase in 4 years. It's a 13% year-on-year gain. And that's above the run rate over the last 20 years. It's a significant increase, 13% year on year. So the Trump administration also is going to be gold positive as well, but perhaps a little less so.
You're based in London, so I want to get your take on how is Europe watching and viewing the US elections? What would be the impact of the results of the election on Europe?
Well,
even though the UK is no longer part of Europe, but...
Well, as far as the UK is concerned, probably a Trump administration would be better for us than a Biden administration, in the sense that he's made it very plain that he's going to make trade deals available. Trump has certainly hidden his dislike for the European Union and its leaders, and by extension, his positive attitude towards the UK. So from a Brexit position, a Trump administration will be a good thing. Biden, on the other hand, has said he's going to come down quite hard on the UK, and particularly in relation to the Irish border. So party politics aside, from the UK's perspective, a Trump win would be a better outcome.
I want to talk to you from a journalistic perspective, Ross, because you work as one of the largest news aggregators in the precious metals world. With all this talk of the pandemic and the election, a lot of times what happens is a lot of important news falls under the radar. What are certain stories that you feel we should be paying more attention to and we're not?
That's a good question. I think the statement by the head of the IMF that Gold the Etf, I think her name is, very important person in world economic affairs, has come out to say that we need a new Bretton Woods. We need a complete financial reset. And that's some big words. And issues like this is being pushed under the carpet or not fully highlighted. What does she mean by that? And what shape does it take? These are issues that will affect us for the next generation. So these are the sorts of things that I think aren't being brought forward. And there's rather a lot, probably the same in the US, too much granular detail about the COVID, and perhaps not enough about the economic effects of it. I would add to that also, the news tends to focus on the bigger cap businesses and how they're coping. But the reality is that, Napoleon used to describe Britain as a nation of shopkeepers. And what he meant by that is, like Germany, we have a large Mittelstand, a large number of medium-sized businesses that are struggling. And I think those voices aren't being heard either, and how they're struggling with this lockdown. You hear about the NHS, government institutions. You don't hear enough about the small to medium enterprises who are really on their knees. And that's a shame.
And that's a really good point. But we do hear about how certain billionaires keep getting wealthier and wealthier, within this pandemic. But on another journalistic note, Ross, let's play out a Biden win, right? How will this impact the news cycle? Because if I look at certain networks like CNN, and not to attack CNN, but when Trump first emerged, right, they benefited. Ratings came in 4 years ago. Everyone all of a sudden was watching the debates. It was, must-see TV. The next 4 years, they spent really destroying him. What happens with a Biden win? Does news become more boring?
Well, it's said that the mainstream media do have a very significant left bias, so one would imagine that they're going to be supportive for what comes next. But let's see. Be careful what you wish for. I mean, Biden has suggested that corporate tax rates will go up from 21 to 28% to pay for these stimulus spends. How is he going to do that in this environment when these companies that he's looking to put these additional taxes on are on their knees already? I mean, the real issue, I think, is the amount that he's going to print and spend. And at the end of the day, can America afford it? Debt to GDP levels will be close to 140% in the next year or so. Now, Reinhard and Rogoff said that any country with a debt to GDP level of over 90% will find it almost impossible to dig their way out of that situation. At 140%, how is America going to grow its way out of that situation? So, when you talk about a reset from the IMF, you look at the scale of the debt that America's got, and they're looking to add to it. It just doesn't add up to me how you're going to do this, how America's going to engineer and dig its way out of this ditch. Whether the media are going to be as kind to Biden, and I've sidestepped your question because I don't want to get involved with partisan conversations about one side or the other. The reality is that whoever's in power, they've got some monumental economic tasks to perform. Who's better adept at doing it, whether it's a Keynesian left-wing Biden approach, spend and try and spend your way out of it, or the right-wing free up animal instincts and entrepreneurialism, the other way of doing it? I don't know. I mean, you can argue both cases. I have a preference for the one over the other as an entrepreneur, but we'll see how that plays out.
Let's bring it home now with my original introduction, where I mentioned that you have worked in all facets of precious metals, really all facets of precious metals. So let's talk gold now, and the latest results from the World Gold Council, and specifically speaking on gold, what should we be paying attention to in terms of, you mentioned the US dollar, but what are other important headwinds here for the metal?
Yeah, today the World Gold Council published the third quarter reports about the state of the gold market. The key information for me that came out from this report are the two primary drivers for the gold price during the course of this year has been ETF demand and central bank demand. Take ETF demand. For the first 9 months of this year, the monthly average offtake by the institutional investor was around 100 tons. But in the third quarter of this year, we saw that declining. In July, 166 at a peak, to 38 in August, to 68 in September, and into the first quarter of the fourth quarter, 25 tons, a quarter of the run rate. So the primary driver behind gold, the ETF demand, which is compensating for weak Indian and Chinese demand, is stagnating. Central bank demand also is weak. In 2019, we saw 166 tons a quarter. First quarter this year, 120 tons. This quarter, third quarter this year, minus 12 tons. So there's no doubt that these drivers are weakening that have given gold its lift.
That surprises me, Ross. Why the drop in central bank buying now? Doesn't make sense to me.
Well, the reality is they've been buying for the best part of 7 years. They've known what's been coming. I think it's probably the all-time high price in the gold market we saw in the third quarter. Gold hit 2,077 in August of this year. And there's no question that central bankers don't have programs to buy. I think they behave a little more like a hedge fund manager. If it's too expensive, we'll back off a little bit. And we had a few large sales, which are anomalies to distort that figure.
No, and and I get that. Like they don't want to buy at the all-time high, but do you think it also means that they don't see it going to 5 or 1,000, 6,000, 7,000?
Well, there are different reasons for each of them. Take Russia, for example, one of the biggest single buyers. The collapse in the oil price was significant for them. Their treasury were literally in difficulty, and so it stopped its gold purchases to support the fact that the oil price, Russia being the biggest oil producer, to build up its reserves. So each country is slightly different. But the other side of that story, by the way, if those two drivers are weak, there is good news as well. India and China, which have been largely absent, the number one and number two producers in gold, which have been almost moribund, have seen demand picking up at last. Interestingly enough, in China, the third quarter demand was up 25% compared to Q2 during the height of the pandemic. So China's beginning to pick up. Gold does still trade at a discount, loco Shanghai, but less of a discount. It was minus $70. It's now minus $30. So you get a sense that Chinese demand is beginning to get some momentum. Indian demand is even worse, down 48%. Indian demand is interesting because it's just slipped below the big figure of 50,000 rupee for 10-gram bar, which is a significant big figure change, and therefore demand comes in. And of course, we're just going into Diwali now. So those two important markets are supporting us nicely.
Very, very good insights, Ross. I thoroughly enjoyed this conversation with you. Finally, in my research of you and your background, I discovered you're quite the yachtsman. So I ask you, with everything happening in the world, have you thought of just, hopping back on a yacht and sailing around the world for another 6 months?
Well, if you like, I do love solitude. What I did do last year that might interest you, Daniela, is I walked the Camino de Santiago, which is an 800 kilometer.
That is on my. Yes, that is on. That is on my bucket list.
With a career change, there's no better time than just to have a full month, and it's the most wonderful experience you'll ever have in your life.
Wow. Well, then I'll just have to do it once I get back in great shape here. Ross, Norman, it was a pleasure. I'm so happy to be reunited with you here today. Thank you so much for joining me. And thank you for watching. We will have much more for you on Stansberry Research. In the meantime, you can follow us on all our social media channels. We are on Instagram, Facebook, LinkedIn, and Twitter. We are all there. Thanks for watching. I'm Daniela Cambone.